So boring zone 2012, 27%. Boring zone 2016, 38%. Boring zone 2020, 20%. Boring zone 2024, 27%. Right. So it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it because you're getting caught up in short-term time horizons of traders on Twitter. And that this macro spasm is actually the opportunity to really think about this, how you want to get involved, where you can find money to add. So this is the opportunity that you've been asking for. This is the last chance to be able to do all of this.
The beginning of the banana zone is one of the most anticipated events among cryptocurrency investors in 2024. The term was coined by Real Vision founder and CEO Raoul, who describes the banana zone as the peak period in every cryptocurrency bull market, when prices absolutely go wild or go bananas. According to Pal, the banana zone kicks off after the full transition from macro spring to summer and continues well into fall, triggered by central banks pumping more liquidity into their respective economies. So far, the transition has not been as smooth as expected. Instead of the significant price growth that occurs during the banana zone, the cryptocurrency market was recently caught in the crossfire that saw over $6 trillion wiped off the global stock markets. Top cryptocurrencies like Ethereum and Dogecoin lost as much as 27% on Monday and have yet to recover fully. According to Pal, these are markings of the boring zone, the phase before the banana zone when prices stagnate or take sudden, unexpected dips like this. The boring zone is slowly drawing to a close, Pal announced in one tweet. The banana zone soon cometh. The boring zone is a gift, and is your last time to load up before thing go bananas, and you lose your mind, and you try your best to f*** it up in an orgy of FOMO and greed. But please don't f*** this up. Pal is quite unbothered about recent price movements, noting that we had even steeper drops during previous bull markets, and they didn't stop the almighty banana zone. In his latest video update, the Real Vision founder and CEO discusses the banana zone and his everything code thesis, detailing the convergence of the business cycle and the crypto bull market, with liquidity from central banks expected to fuel rapid price increases and economic growth for the next 12 to 18 months. Despite all indications otherwise, Pal is certain that central banks are about to unleash a torrent of liquidity on the markets. He is even more certain that that will bring us the banana zone, and crypto will grow from a $2 trillion market to a staggering $12 to $15 trillion market by 2025. As we bring you clips from Pal's video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and let's dive right in.
So liquidity is the prerequisite for markets to rise. And so that is all coming into the play, and now we've been given the reason. You know, people say, well, we need something to break. Well, guess what? We had it today. So we've got that. So global liquidity, when I look at it, global liquidity is about to break out too. I know you might think of this as a sin, doing technical analysis on the global liquidity index, but hey, it just shows the sideways contraction in global liquidity and the likelihood that it plays out, driven by the US, driven by Japan, driven by China, and also eventually driven by the Europeans and everybody else, because they all need to refi their debts. That's the big game, the everything code game. And global liquidity drives crypto. So if global liquidity is going to break higher, crypto will too. So if you've got to think of these moves we're seeing currently as wiggles on the path of the main trend. And what you tend to do, it tends to overextend in bull markets, and we should see that in due course. So as global liquidity rises, cryptocurrencies will rise, as will other markets like NASDAQ. The other thing is global M2. Global M2, many of you have pointed out, is starting to rise. It's starting to break out. As that breaks out, that's led by financial conditions. So global M2 is rising, another liquidity measure. Global liquidity is going to rise. Financial conditions are going to rise. Okay, this is what we're looking to see. This is the macro summer signature, the macro full signature, the times when debasement comes, the times when assets do really well. You can see Bitcoin, how sensitive it is to global M2. As global M2 starts picking up, Bitcoin year on year should start picking up too. So again, I don't see anything concerning in the macro picture. The macro picture is incredibly supportive of higher asset prices. So that's why I think we're dealing with a spasm and not a regime change in macro, where we're going into a recession or something like that. In fact, it's the fears at the bottom of the cycle that's causing this as the cycle starts to rise and things like the dollar needs to start weakening. It's not fears the other way around that the cycle's about to fall apart. You can see the financial conditions index also affects S&P 500. Equities are driven by financial conditions. So there's a 6-month lead here. So as financial conditions start easing, that's the number going up, the S&P 500 should follow suit. So again, we expect to see stronger equity markets ahead. Emerging markets, they're driven by financial conditions, 6-month lead. Emerging markets really a function of the dollar, which is part of the financial conditions index. Financial conditions, our measurement is the dollar plus rates plus commodity prices. And we're seeing those ease, and that should put emerging markets higher over time for those of you who trade them. Tech stocks, 6-month lead, same thing. Tech stocks have been correcting and had obviously overshot financial conditions somewhat. And again, we should be looking for a base over this period of time. This volatility, for those of you who aren't kind of max allocated to this stuff, this is the opportunity you're really going to want, because NASDAQ again should take off from here around these kind of levels. Now, again, I'm not talking about today or tomorrow. I'm talking about over the next 3 or 4 weeks. We should start to see liquidity coming, financial conditions coming, and equity starting to scream higher again. The big driver here is the PBOC. Right now, the PBOC have this cyclical pattern of every second half where they start injecting liquidity into the system. Additionally, we know they have a bigger cycle, much more like 2020, where they've got to deal with the debt deflation issues at home. So they're going to have to do quite a lot of easing, and they're going to do quantitative easing, and they're going to do all the liquidity measures necessary.
According to reports, the markets are counting on the Fed to head off the recession by announcing sizable rate cuts during the September FOMC meeting. Traders and investors believe the Fed has made a terrible mistake by holding rates higher for too long, just like it allowed inflation to soar to multi-decade highs before it started hiking rates in 2022. One chief economist pointed out that though there might be no recession in the US today, that could quickly change by year-end if the Fed fails to start cutting rates by September. Powell shares exactly the same sentiments. The market is fed up with the Fed's QT policies and Chairman Jerome Powell's hawkishness, even in the face of such an aggressive response from the markets. However, Powell says Powell's hawkish posturing will end quickly at the next hint of problems, especially as we get closer to the elections in November. The Joe Biden administration is already very unpopular for its economic policies and cannot afford to leave that reputation unchanged if Democrats want to stand a chance at the polls come November. This is why Powell is 100% certain that QE is coming, and it will be swiftly followed by the banana zone. Here are more clips from the video.
So let's talk about the banana zone, because everybody cares about banana zone. All of our hopes and dreams are in it. And I don't want the stupid, well, you promised bananas. I've never promised bananas immediately. I've told you this is how it plays out. This is a period of time. I've also talked about the boring zone. So you've seen this chart before, but now we've just added the percentage corrections in the boring zone to make it even more clear to you guys how this works. So boring zone 2012, 27%. Boring zone 2016, 38%. Boring zone 2020, 20%. Boring zone 2024, 27%. Right, so it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it, because you're getting caught up in short-term time horizons of traders on Twitter. That's their time horizon. Nothing wrong with being a trader. I just don't think you'll make as much money. So I think you're better off to think of the long-term gain is, how do I use these kind of opportunities to put as much money in as possible so I can capture the big upside when it comes. And I've shown you why that's not just a hunch based on these charts. It's actually based on the everything cycle. And that this macro spasm is actually the opportunity to really think about this, how you want to get involved, where you can find money to add, how you can get your portfolio set. It applies to tech stocks. It applies to equities overall. It applies to emerging markets. All of these things are setting up perfectly. So this is the opportunity that you've been asking for. This is the last chance to be able to do all of this. So I look at these with glee and say, thank you. All I need to do is find some money to put in because I'm max allocated. But, I do have an income. So, I try and scrape my bank account for any excess that I've got that I won't need over the next few months and stick them into markets. I mean, I don't sell anything in crypto. I've not sold anything, meaning my overall portfolio at all since 2020. And I just continue to compound and add, and that's worked for me really, really well. For those of you who keep asking, no, my allocation hasn't changed. It remains that my core portfolio is in Solana. I have some memes, which are WIF, Bonk, some Doge. And if those go up and down 80%, it doesn't matter to me. It's fun. I actually think they'll do well. You may have a different token. They're not my recommendations. I'm not trying to shill you into buying anything like that. If you just want to stick with Bitcoin, it's fine. Ethereum has been a hairy ride. Now, part of what's been going on is jump trading have been dealing with legal suits with the SEC, CFTC, and others, and are closing up shop in market making in crypto. And they've been fire selling everything. And that's created a huge overhang. A lot of this boring zone has actually been the overhang of selling by Grayscale as they unwind the trusts, Germany selling Bitcoin, Mt. Gox selling Bitcoin, the FTX estate selling Solana and other tokens, and then jump trading. So that's what's been causing this really. This last spike was this macro spasm on this small macro shock. And again, let's see, because, let's see what happens with the Iran-Israel situation, because that could create another period of fear. But generally speaking, you get fearful of the rhetoric and buy the bullets. That generally has worked in markets over the years, although, trading war is never not something you want to aspire to, but that's how it generally works. So the boring zone driven by excess supply. Also, we've got a lot of token unlocks from newer projects. So all of that supply plus all the amount of memes has taken a while to digest. Liquidity will digest it. Think of it as eating up all of the supply as the holders from the last cycle where things went wrong, like the FTX estate, etc., start divesting those assets, putting them into stronger hands, allowing the markets to rise over time.
The banana zone soon cometh, and all you have to do is not lose your tokens, or, in Pal's words, don't this up. According to the former Goldman Sachs executive, every bull market has ups and downs and attempts to fool you into losing your tokens. Your only job is to hold on for dear life and patiently ride the wave so you can reap the benefits. In a post he made on Twitter, the Real Vision CEO wrote, "The job of every bull market is to throw you off. Your job is to not part with your tokens. That is your single job. If you can just not this up, keep hold of your tokens, and then eventually the banana zone comes and we can realize some of our hopes and dreams. There is a risk that may not happen, but I don't see it in all of the macro work. It doesn't mean we're 100% right, but the odds are stacked in our favor, and the everything code is our friend. I don't know whether the bottom is today, next week, or the week after. I wouldn't try to time the bottom, but I would try to think about how to get more money into these markets in a kind of measured way, whether you dollar cost average in or not. Are you still a believer in the banana zone, or do you think it's all toast at this point? Please share your comments, as well as your thoughts on Raoul Pal's video in the comments section below. If you liked this video and want more like this, please consider giving this a thumbs up and subscribe to the channel for more videos. We appreciate all your support and hope to see you in the next one. Thanks for watching.